gross profit within Tally. So gross profit is basically calculated by sales minus cost of goods sold. मतलब ये होता है sales minus cost of goods sold. And primarily it is valid where there is inventory involved. So the inventory can be involved in retail as well as in production. Right. But हम लोग we will take up a very simple case of retail. That means I buy something and then I sell it at that price. That means I'm buying something at say rupees X, selling it at Y. Right. So then Y minus X is approximately my profit. So X is should be my cost of goods sold. Now, how does one calculate the cost of goods sold? So इसमें एक ये चीज़ है क्योंकि विद इन टैली की इसमें कैसे तो टैली बेसिकली विद इन टैली का जो मेटा डेटा है वी हैव गॉट समथिंग कॉल्ड एन एफेक्ट स्टॉक विद इन द लेजर ग्रुपिंग. ठीक है ना. पर उस एफेक्ट स्टॉक से आपको जो है पूरा का पूरा परचेज अकाउंट का सम मिलेगा. राइट. सो basically how so you I'll just go back to this, make it simpler, that my opening stock value for a date plus my purchase, whatever is there in my purchase accounts, minus my closing stock value at the end of the date will give you my cost of goods sold. Right. Now in order to calculate the cost of goods sold, there are two ways. One is called the first in first out, and second one is called the weighted average. Now the first in first out basically states that my item whichever comes first moves out first. That is primarily applicable when there is batch involved, because based on the batch I can calculate which item is to move out first. In case you're not having batch, in case then calculating the first in first out is very difficult because we have to do it through based on purchase date. Right. It's a more complex calculation, but that is there. The second way which the government accepts for cost of goods sold is the weighted average. So I will now explain how is the weighted average calculated and how exactly can my owners get more value. So within Tally actually the gross profit by ledger and the item is not available. Either the gross profit is available by ledger or the gross profit is available by item. If from the ledger I need to break it up by item, then I have to look at the ledger balance and then go to each different item and segregate by it manually. But since we have made the product from the base up across multiple companies, so therefore we should be able to calculate your gross profit at the ledger as well as the item level. Now I will tell you how exactly do we calculate the cost of goods sold using the weighted average at the item level. So first thing is that the weighted average is calculated based on the complete historical valuation as of this date. ठीक है ना. So what happens is, suppose I have my tally starting at the beginning where the opening stock was 0 and the opening stock value of each item was 0. And then I have to calculate the total inward amount as well as the inward quantity as of this date when my weighted average is to be calculated. Right. So suppose I'm calculating at the 15th, then I need to check up what was my total inward amount and what was my total inward quantity up till that date. Now the case that comes is that what is meant by inward amount. Right. Let's assume that how do I calculate what is my inward amount. Now here understanding of how the Tally stores its metadata is very critical for the business owner. So for example, for calculating my inward amount, I will say whatever is my debit amount up to that date. How is that debit amount calculated? That means that is all my inventory movement which is not cancelled, correct, which is not void, correct, which is not optional, correct, right, and which is not deleted. So you remove the cancelled, optional, deleted, void and optional from your calculations for calculating the inward amount. Now many owners basically say that they do not want to include those entries which do not impact my ledger. For example, my delivery note, material in, physical stock. If I put these particular entries within Tally, then it will not impact my ledger. That means if I take say 10 units of physical stock from one place to another, then I will get what? So 10 units will be transferred. So 10 units will be debited but the value is 0. So many high profile businessmen who are very careful about their accounts, they say, no, please don't include those entries which are not impacting my ledger. Now, to exclude those entries which are not impacting the ledger, there are two ways of doing about it. One is that all the inward amount and all the inward quantity you put in the filter of is invoices, yes. Alternatively, what you can also say is that I can have is invoices, yes, as well as my ledger primary is being purchase accounts. Right, that means whatever I have purchased and it's invoiced, I will include only that as an inward, the remaining I will not include. You can also go through voucher types using the default tally sequence, wherein you have got two particular fields. One is FX stock and one is active. Now, FX stock, if it is yes, that means that it is not going to impact the ledger, right? So it will be like sales order, delivery note, physical note, and so forth. So you can also put in a filter FX stock is equal to no, so that you exclude all these entries which will not impact ledger. Now for excluding say sales order, right, then what we basically do is we physically type in that look exclude order and then we get the inward. Now what we have got is we'll be now to calculate the total amount up till a particular date. We do lot of calculations within SQL as well as in DAX to get the total amount value up to that date as well as total quantity value up to that date. The total amount value divided by total quantity value is my weighted average rate, right? That weighted average rate into the total sales quantity for the sales which is on that particular date is going to give you my cost of goods sold, right? And my closing stock value is going to be my opening stock value plus my total purchase accounts up till this day minus my closing stock value as of that date. So how is that closing stock value as of that come? My weighted average rate into the closing stock number, right? That will give you my my cost of goods sold. So for example, opening stock plus total purchase accounts minus cost of goods sold. So whatever was sold up on that date into the weighted average rate is equal to my closing stock value. So in this way I can get my perpetual closing stock value as well as the cost of goods sold by ledger as well as item, because most people do not see okay fine what is my ledger wise, so they will see okay fine and in this invoice I made this much of say profit, but I want to look at how much is it item by item, right? How much have I made from there, and from there on I have to reverse engineer. So if you want to know more, please do contact us. We will do a small project for you and help you calculate what is the money you are making on each item that you have sold over historically. This can be done both non-batch wise as well as batch wise, and we will do it for using either SQL or Power BI. Then that output can also be fed back into Tally, and it can also update your closing balance value and other numbers within Tally. Thank you very much for your time. I will give the details below, and you can contact me when if you require. Thank you.